Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, September 22nd, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see here that the ES has completed a move all the way back down to the previous month's low price and also back into the July 29th FOMC key level, finally filling that level. We talk about that trade often here when an FOMC key level develops and price moves away from it. As soon as you see strong rejection, you tend to snap back to that level. We got it yesterday at 32.39. The other thing we saw here was is how price is moving in certain increments off of the initial key range here. This is the initial impulse move down. This is about 300 points here, and we saw the initial 300 point move down. Then we've seen it back up, and then we've seen another 300 point move to the 100% expansion target, and then another one back down. So it's definitely moving in 300 point increments here, and if price were to fail here, say 32.30, it opens up the bottom of the key range around 29.30. So again, another 300 points moves down, or do we bounce back up and retrade back toward 35.30? So right now, this market has been very good about moving in that 300 point increment off this key range. The key levels are there, but we got to continue to see how this develops here off of the previous month's low. Typically speaking, coming down into that low, if there's a strong enough rejection, that could lead price back up towards, say, 3,400 and retesting that 3,400 quarter FOMC key level from the recent FOMC day there. That's 9/16, so that could be a snapback. But a failure, again, and this doesn't look like the strongest rejection, a failure to hold 32.40 today could open up some weakness down below where this thing starts to stretch down toward 30.77 and the 29.30 zone. All right, let's take a look here at the NQ. With the NQ here, you've seen an impulse pullback as well. Boom, didn't quite get the midpoint and instead push lower, but in the previous session here we did get below the previous week's low, we got below the previous month's low, and rejected both. You can see here we have a buy signal that developed yesterday, and that is basically a rejection at a key level here. That tandem there can tend to lead to at least a short-term bounce. Again, a rotation back toward 11,500 could be in play as long as price continues to hold above, say, 10,800 today, right? This is the 10,845 level. That's the level that if price can stay above that zone, we bounce back to the previous month's midpoint. That's 10,500. If we fail to hold 845 or 800, especially, then that opens up the downside targets below. So right now, that's going to be very important. The previous session's midpoint is 10,833. Previous month's low 845 half, so that zone right there again is going to be very, very important today. If price were to rotate into that area, it could be a buy the dip for a continuation up toward 11,500. All right, let's take a look now at crude oil. So with crude oil, we've had a significant week of action here where we had a very narrow range here that led to a major breakout. We talked about how for all intents and purposes we've reached the upside targets here, and in the previous session here we saw this thing melt down. You see a doji that is formed up here, price go offered through that level, and now resistance coming in at the previous session's midpoint, which is 40.18. Very, very important the way that's playing out. So this is a doji with a stop run day and then a retest here that could lead to more weakness back to the breakout point. So that would bring you back toward 37.52. In the previous session, I mentioned let's keep an eye on the previous session's midpoint. That's 39.27s. Price got just below that, formed a rejection, and then bounced the rest of the day. That was a great level. That's still going to be the level to watch here today. 39.27. If we fail to hold 39.27, that could open up more selling pressure ahead, where ultimately over the next day to 2 or 3 days we could reach the 37.52 level, which is the breakout point. So 39.27 is going to be very, very important today. A failure to hold that level opens up more weakness. Holding it again opens up the potential to see some sideways trading range action here after a big stop run day down yesterday. All right, let's take a look now at gold futures. Here's gold futures here. We had a pretty significant day in the previous session where we had a huge one-day drop as low as 1885.40. There was a pretty significant rejection on those lows, and price climbed the rest of the day quietly. That was pretty significant. We are now inside day, below the previous session's close at the moment. Again, attempting to form higher lows off the 1900 level. And again, what I've mentioned before is that we pretty much remain within 2000 to 1900. That's pretty much the range for right now. And we likely, once we get to an edge, we could fade back up, but we could continue to do this until that major expansion day occurs. Since the primary trend has continued to be up, a downside break here for me is an opportunity to watch for rejection at the low edge of the key range, because if there is rejection between 1830 and 1870, that could provide a significant rotation back to 1957.70, followed by the potential to rally back toward 2089 to 2100. So that's going to be important here. When do we find that strong low? Perhaps yesterday was the strong low, but again today we have to see, does it continue to hold 1900, or do we need to really test through that key range low? At the moment we're on the swing phase down. If we find strong rejection here, we can get a quick move right back up to the HVN and perhaps toward the upper end of the value range. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.